Okay, so this is going to be the post before the Monday morning market open, and this is one of those times where you really need to understand the power of technical analysis and how different things will predict stuff like this. I'll go into what I was talking about before, but it looks like with Greece we have a victory for the New Democracy with the radical left a bit behind, and the hope right now is that the New Democracy and the PASOK, or the Socialist Party, that they're going to form a coalition to get an absolute majority in the to govern with. So with that, we already have the Greece people or the Socialist Party messing things up. Okay, so you see right here, the PASOK, I'm on zerohedge.com, by the way, that there was an announcement right after the election that the Socialist Party would not join a coalition government unless the radical left also joins that coalition. Okay, so they're going to have to try to get this party, and this party all together, which is going to make up about like 60% or no, 70% of the entire voting base. Is it going to happen? Well, let's look at the charts. Yeah, I can't forget to the point where a triangle breakdown one time predicted the Japanese earthquake. I don't know how that worked, but it did. So that was probably just luck anyway. Okay, so you know what I've been saying for a while. I've been saying, okay, so we got 6-month chart. We go to the S&P 500, SPX, and we have all of these lines right here. So these are Fibonacci pivot lines, and if you notice, every time that these lines hit a place outside the initial couple Fibonacci points, they represent turning points in the market. So you see right there was one, another one was right there that predicted one, and the next one after that is scheduled for June 19th. Okay, so we have the 19th there as a pivot line, and on this set of pivot lines, which I'll change the color right now to, we'll go with pink. On this set of pivot lines, you see that this one is calling the pivot usually just a day in advance. So you have the pivot there, pivot here, and also a pivot on the 18th. The other one is the 19th. Okay, so that being said, you see that more or less both of these, they're bunched up. So we expect a market reversal right there. Okay, so at this point, if we go to the, if we just think it through first, we would say, all right, so that means that something is going to happen. Markets are going to go up. They're going to keep going up, but then the next 2 days are going to reverse. So if I go into the just momentum studies to show you what's going on, see, I just use the RSI. We'll stick with the, we'll go with the 60-minute for now. You'll see that there was a bit of divergence right here, but then it once again triggered a buy signal. So we're still in a pretty healthy bullish mode on the S&P 500. Now, if I go into the Russell 2000, which is the small cap index, it's a little, actually go back to the 60-minute. We'll see if it actually manages to break this level, but it looks like it's probably going to have some divergences. So at this point from the Elliott wave analysis, it's saying, and yes, more lines over there, it's saying that the Russell 2000 cannot get above 784. And that's just no matter what. And it also has pivot dates set as, we have these two last week that predicted the bottom. There's none after that, so to get a different one, we go to the S&P 500, which gives us those 2 dates. Okay, so if we go with those two, we see that the S&P 500 cannot get above 1357, and that's just one of the cardinal rules of Elliott wave analysis. So it's basically saying, yeah, we can gap up, absolutely, it's no problem. But the mere fact that the Russell can only gap up, let's see, it's at 771 right now. The highest it can go is 784. So 14 points on a index that is at 775 versus on the S&P, it can go up 15 points on an index that is at 1342. I expect that the Russell's going to going to underperform in that time. But also on the Dow, we can also mention that this one's starting to break into the no territory. So this one, if I actually do the targets on the, this one has a slightly different wave count, but if I actually do the targets on the S&P 500, what we have, I said it'd be a proportional movement of 3 waves. So if we have that, and then we have this corrective movement here, then we take this, it gives us targets of right around like 1364, 1341, and if I put the 50 in, I won't even put the 50 in, but basically what's saying is that this level at 1364 to this 1357 mark is going to be a major resistance zone. So don't sell yet, but get ready to. By the way, trade of the week, sell JP Morgan at 36, about 36.83, 36.50. All right, happy trading.